Welcome everybody. Thanks you very much for attending this event about the future of SMEs, liquidity and business continuity. Today we have organized this webinar again together with SMEunited. Thank you for that, and welcome to Mr. Gerhard Huemer, our first speakers. As you know very well, EFAA is the big boy for small and medium-sized practices in Europe. We are working to help both capacity of SMPs to assist SMEs. We are doing a lot of activities. We have prepared an important document and projects in the last period. For example, please, Sarah, could you pass the next slide? The next. No, the other slide. The next slide, please. Okay. This slide is okay. We have prepared an important document and project in the last period. For example, you can see on our webpage. In our opinions, important guidance for SMPs. We have prepared important position statement about the single market, about the non-financial reporting, or about, for example, laundering money. Different position statement, the high interest for our profession. In the past, we hold other webinars that you can see on our webpage too. In our opinion, in general, our members from EFA have key role to play in advising SMEs. In the current days, our main concern right now is to ensure business continuity of SMEs. Of course, for the reason we have prepared this webinar. We have to be vigilant, or we need to pay attention and work on this line. Our voice must be heard. In my opinion, we have a real risk again about the market concentration, about the serious problem for our SMEs, and we must do everything possible to report that perhaps exist certain positions that may not be in the general interest. We need to pay attention, and we need to be careful. And activities like this webinar are very important because we are showing what is our opinion in this about these issues. Of course, IFA is totally independent, is an important independent organization, and we will continue to work in this area. Thank you very much, Mr. Huemer. Thank you very much, of course, Mr. Paul, our IFA director, for our work, for preparing this webinar. I would like to give the floor to Mr. Gerhard Huemer and join this webinar. Thank you.
Thank you, Salvador. Thanks for inviting me again.
Your micro is off, Gerhard. Gerhard?
I'm trying.
Now it's good. Now it's perfect.
Yeah. You're sure? You hear me? Because I don't hear you now.
Yeah, because I switched off. I can hear you very well.
SMEs and crafts. We are representing about 12 million enterprises all over Europe. And next to national craft and SME organization, we also have a number of European sector organizations as member, and one of them is your organization, EFAA, and we are very happy to have you as our members because your people provide a lot of important support to our SMEs. Paul asked me today to speak about insights from SME Survey on our topic, and I think there are not so many surveys, but I think I would like to give today a little bit of insight how the problem about liquidity, business continuity, and solvency looks like from our point of view, and what Europe is doing to help SMEs and what we are working on at the moment. So I will first have a look into the liquidity problem of SMEs during the Corona crisis, which measures has been taken at European level, at national level, and then why we are afraid that the liquidity problem we have seen during the first phase of the Corona crisis now slowly turns into a solvency problem, and what can be done there, and what Europe is thinking to do on it. So please, next slide. May I have the next slide, please?
It is the next one. Liquidity problems of SMEs. Phase 1.
Not on my screen. Now it's there. Okay. At the very beginning of the crisis, our first concern was that SMEs will run very quickly into liquidity problems because of less turnover or even no turnover, while fixed costs remain. SME owners have to pay for their living, etc., etc. 90% of SMEs reported to us that they have lost turnover during the lockdown. 20% of them lost 100% of the turnover. And according to OECD figures, 40% of SMEs reported already in May liquidity shortage, and this increased to 50% if you look into the most impacted sectors like hotel, restaurants, the retail sector, the construction sector, the event sector, etc. So the first reaction of most of the member states, de facto of all member states, the European Union, was to help SMEs to survive this phase and to do something to not further reduce the liquidity. It was postponements of payments, of taxes, social contributions. We have deferrals of payment for insurance and loans. New loans have been provided, partially of them from the banking side, partially supported by the public sector. There was moratoria for insolvency procedures to don't kick the companies out of the market or of the living. For smaller ones, for micro enterprises, for self-employed, there have been income compensation to allow them to survive this phase. And there has been for medium-sized enterprises fixed cost compensation schemes to cover the running costs during the period of low or no turnover. At European level, these measures have been supported with different instruments. The European Investment Fund has provided additional loan guarantees via the EFSI scheme with the COSME program or the INNOFIN program. The SURE instrument has provided loans to, or will provide now, because in the latest phase of implementation, will provide loans to member states to finance short-term work schemes and income compensation schemes for self-employed. There has been more flexible use of regional funds, which allows to re-channel money from the regional funds programs to, for example, to SME loan guarantee schemes. The European Commission has changed their guidelines or the framework for state aid to allow more support than in normal times. The European Guarantee Fund has been built up during the last months, providing additional 25 billion of guarantees, allowing 250 billion of actions to support companies at European level. And in the pipeline, we have the InvestEU program, which should come with the next multi-annual financial framework, and the Recovery and Resilience Facility, which will be financed by the Recovery Fund or the Next Generation EU Fund, and should allow member states to provide additional support during the next phase of the crisis. So, but now we are coming to the second phase of the problem, of the crisis, and what we see is that most of these liquidity support measures have increased the debt level of SMEs. And what will happen when the payment moratoria ends? If they have to pay now the taxes which was not paid during the first months, what happens when the banks starting again asking for interest rates or the repayment of loans? What happens if social security contributions have to be paid, etc., etc. What we see at the moment is that some countries, at least where we have figures, they're seeing the problem coming in the beginning of next year, because this moratoria should stay till the end, at least till the end of the year, and then the problem is a little bit postponed. But in other countries, it may already come up earlier. If you have very low equity ratio in your balance sheets because of this high indebtedness, it of course reduces the creditworthiness of companies. So they also will not be able to get fresh money in. And the European Commission, in the run-up to the negotiation of the European Next Generation EU Fund, have calculated that there is 720 billion of equity lacking, and there has to be recapitalized in one or the other way. As I said before, experts expect insolvency rates will boost either later of this year or in the first semester of 2021. What can be done to strengthen this solvency situation of SMEs? On the one side, it is recapitalization with private or public instruments. For SMEs, it's not that much direct equity injections, because first, many SMEs don't like to have equity investors from the outside. Secondly, SMEs are too small for private investors because of the cost of due diligence, etc., etc. So what we are arguing for is to provide quasi-equity, subordinated loans, silent participation, and similar schemes, which help also to strengthen the solvency situation of SMEs without giving up the control over the company, but also with less risk for the investors. And of course, such instruments can be supported by public guarantees coming from the European or from the national level. The third thing is the restructuring of companies, which bring up changing the structure of debts, etc., etc. Or for very small companies, these fixed cost compensations, which de facto are grants, which help this SME to strengthen the solvency situation. Or if all of them together doesn't really help, we have to see into solvency procedures to make it less burdensome to go out of the business, even maybe to create the possibility for a fresh start of entrepreneurs, etc., etc. These are the options which are available to strengthen the solvency of businesses from our point of view, but this is more on your side. I think you have more knowledge about this than we have. So what's in the pipeline at European level to support this? Originally, the Commission has proposed to create a solvency support instrument, which should have a budget of 26 billion euro to provide instruments for recapitalization of companies. A large part of them should have gone to SMEs. Unfortunately, the head of states have decided on the 21st of July, when they agreed on the next European budget, to to cancel this instrument, this will not be available in future. At the same time, what has been agreed and what is now starting to be implemented is equity and quasi-equity instruments as part of the European Guarantee Fund, the new European Guarantee Fund, which was created by the European Investment Bank. We know that the European Investment Fund is working on to prepare the first calls to give loan guarantees and quasi-equity instrument, provide quasi-equity instruments and support also equity instruments to recapitalize SMEs. Then we have the regional development and cohesion funds, which will be re-established in the new multi-annual financial framework. Also here is the possibility to provide solvency instruments at national or at regional level by national intermediaries. And of course, the new recovery and resilience facility should be used. And here the member states starting to discuss their recovery plans. And these recovery plans, from our point of view, should include also support measures for SMEs to help SMEs to solve the liquidity and solvency problems. I think this is justified because the outcome of the negotiations on the 21st of July was that another 650, that 112 billion money was shifted from European programs like the foreseen solvency instrument to this recovery resilience facility. So the member states have much more money available now for their recovery plans. And I think it would be justified, and also our members will work on it to get involved in the discussion at national level to include SME measures in these recovery plans. On the restructuring side, SMEunited is involved with other organizations in the Early Warning Europe project, which is a project helping SMEs, guiding SMEs, or mentoring SMEs which are in difficulties, either to ensure their liquidity or solvency, or to help them restructuring, or to help them in the insolvency procedure. And now we are coming to the point in the discussion where I want to hand over to Paul, where it's about restructuring and of SMEs which are in difficulty. The last point that I would like to make is that the European Commission also has changed its framework for support for SMEs or for companies in general which need support for recapitalization in the framework of the temporary framework of for state aid. And luckily, this framework is already there till the end of next year and allows member states to do more on the restructuring side and on the rescue side than the normal rescue and restructuring guidelines are allowing in this area. So this is what I wanted to put on the table for the discussion, and I would like to give the floor back to Paul.
Many thanks, Gerhard. It's very interesting to see how the European Union, the Commission, is changing its policy instruments as time goes on. Obviously, we've been very encouraged to see huge amounts of money being mobilized to support businesses across Europe and in particular SMEs. But the interesting point that you're making here is that the problem seems to be shifting from a short-term liquidity problem. In other words, the ability of businesses, small businesses, to be able to fulfill short-term obligations. The problem is shifting from that of liquidity to a longer-term solvency problem, where even previously viable SMEs are now struggling to stay afloat and to survive. Solvency, for the sake of those people online that are not so familiar with these terms, refers to the ability of the business to meet and fulfill its longer-term obligations. So that seems to be the emerging problem as of now. We've got two ways of posing questions here, as I've mentioned in the chat box. One is to use your raise the hand function, and then I'll cue you in to pose the question, or you can pose the question using the chat box itself. But I see that Robin Jarvis would like to ask a question. So Robin, please go ahead and unmute and pose your question to Gerhard.
Thank you, Paul, and very interesting presentation. Thank you, Gerhard. That in the UK, the Centre for Economic and Business Research has estimated for SMEs that 333 billion are in cash deposits at the moment, which is the highest there's ever been. Which implies, and at the same time, I'm aware that there's real liquidity problems for a number of SMEs, a considerable number in the UK. So you've got to, basically what's happening, it seems to me, in the UK, is that certain sectors of SMEs are being hit very, very hard with reduced turnover, cash flow problems, etc. But others are okay. They've done rather well. So, for example, to think of an example, home improvement retailers have done extremely well in the UK, but there are others, of course, that haven't done that well. So my question is, and I recognise the serious liquidity problems in the sector generally, my question is that should there be a policy approach that actually is more focused on sectors rather than just averaging everything out and say there's a problem with SMEs, and say actually there's a very large sector, a number of sectors here that are in problems, whilst the others are not in that particular situation. And I'd be very interested in your views.
Should I come answer directly? I think you're right that you have to look differently at different sectors, but I think it's even not enough to differentiate between sectors. I'm from Austria. We have regions in Austria where the hoteliers in the lake areas, they make the best turnover since years. Mm-hmm. And in other parts of Austria, mainly in the big cities, the hotels are still empty up to 80% of the capacity. Mm. That means in reality, we have to be even within sectors. That's true for the retail sector, that's true for the hotellery and restaurant sector, that's true for the event sector, etc. We have to differentiate between those who are in trouble and which are not in trouble. We have schemes, for example, where they only you can only apply for a scheme if you can prove that you have lost at least 30% of your turnover, for example. And there are two important things, not to take too much time. The first thing is you should not support companies which are not in need for support, because this is waste of taxpayers' money. If you have no real problems, you also shouldn't get the support. But the other problem, which is also as serious as the first one, is you also should avoid to support SMEs or companies in general which have no future business perspective. And only the approach saying if you have been without troubles before the crisis is maybe a precondition, but it's not sufficient for it, because you may have had no troubles before the crisis, but you are maybe active in a business sector which is not coming back to normal the next 2-3 years. And this also should be avoided. Yeah? If there is a short-term bridging needed, it should be done, but we should not subsidize. So we should not hinder needed structural changes in the economy, because this will go to our own welfare, to our own competitiveness, to our own productivity for the next period. And it is a very sensitive decision for politicians, but also the discussion for us is very difficult. How where you set the lines, yeah, for this should be supported, this should be restructured, and this has no need to be supported. But this you have in mind every time when you design a support scheme, you have to ask yourself these questions.
Okay, thank you.
Yeah, I think a very good question that Robin raises, and Gerhard a great response to it. I think, as you say, the point about the sectors is interesting. Certainly, certain sectors are suffering more than others, but there's also a geographical dimension to the problem. As I understand it, many of the capital cities in Europe, many people have not returned to work. They're continue to work remotely, and possibly will continue to do so even after the virus is long gone. But that means whole business districts are almost like ghost towns right now. There's nothing going on, and all the businesses in and around those areas, oftentimes small businesses. They can be cafeterias, they can be places to eat and drink, and places to repair your shoes, and places to dry clean your clothes. They're not able to survive right now, or finding it very difficult. I'm looking for more questions. Luca, if you wish to make a statement, please go ahead and chime in.
The only remark was about the fact that the challenge is not only for capital cities, but for larger cities in general. I mean, Turin or Milan are struggling with the same problem at the moment. So it's not focusing exclusively on capital cities. And paradoxically, in smaller villages, you have people who are telecommuting, and so they are increasing consumption.
Yep.
Yeah. Thank you, Luca. Any other questions at this point before I roll on to the latter half of the presentation, which is what I shall be delivering? Okay, everybody on the call will have an opportunity to pose another question towards the end. But what I'm going to be talking about, thank you, Sarah, is business continuity. What tools and techniques are available, and what is the role of the professional accountant, in particular the small and mid-sized accountancy practice, in helping SMEs survive these somewhat challenging times. What I want to do first of all is just quote you some data which was pulled together by the ACCA. The ACCA, I understand, is a member of SMEunited, and it's also a member of EFAA. ACCA has a global footprint, and it does have a large number of members across pretty much every European Union member state. In the early days, gosh, it seems like forever ago, but in the early days of the pandemic, or the early days of the lockdown period, towards the end of April, on April 26, ACCA issued a survey, COVID-19 Global Survey, Inside Business Impacts and Responses. And they received responses from 10,000 respondents from over 100 countries. And I understand about 40% of those respondents were from the European, were from Europe, and specifically the European Union. In late June, the ACCA followed up this survey, did pose pretty much the same questions again. So they had data to compare June to April. As of now, we've not got any more recent data for September, but we can only assume that the trends that were spotted by ACCA in this June to April comparison have in fact continued. So what did they find? Well, they found, much like what Gerhard was saying, that what SMEunited had found, that businesses were increasingly experiencing cash flow issues. Almost half of them in June were experiencing cash flow problems. And like I say, perhaps today that could be even more than half. Cash flow problems have been particularly acute for the SMEs as compared with larger organisations. They perhaps simply do not have the reserves to call upon that the larger businesses do. And the survey also found that small and mid-sized accountancy practices, that's the SMPs, in June started to foresee increased opportunities to assist their SME clients in improving business continuity and resilience. Many thanks, Sarah. You're ahead of me. What the ACCA, one of the conclusions from the April report, and I quote for you here, was that ACCA's data shows almost 1/3 of organisations do not have appropriate business continuity plans in place to respond effectively to this crisis, or in fact any crisis, never mind the coronavirus pandemic. This is particularly acute for smaller organisations, with 38% of those suggesting they do not have a continuity plan in place, compared with 15% of those businesses with 1,000 or more employees. So in short, business continuity plans are not common amongst SMEs. Many SMEs do not have them. Now, business continuity plans do not necessarily need to be super detailed or sophisticated. They can be relatively simple and straightforward, as you will see in a few slides' time. What all of this does, of course, is suggest that we have a liquidity problem that is increasingly becoming a solvency issue for a number of SMEs. And with that in mind, the International Federation of Accountants, which is domiciled in New York, which represents the global accountancy profession, published on the 11th of May a small business continuity checklist, how to survive and thrive post-COVID-19. And the intention of this document was to serve as a tool for SMPs to use with their SME clients, or in fact for SMEs to use in a do-it-yourself fashion without any intervention or involvement from their small and mid-sized practice. The stimulus for IFAC to produce this business continuity checklist was, of course, the growing concerns around the liquidity and ability for small business to continue. But it was also based on the fact that research by IFAC suggested that the involvement of professional accountants in the financial management of SMEs help these SMEs stay resilient and sustain through challenging times. Now, the IFAC publication is available in multiple languages. Sorry, if Sarah, you can just flip back. It's available in terms of European languages: French, Polish, Portuguese, Romanian, Turkish, and it's available in many other languages. All of these you can get through the hyperlinks on the slide deck that I have in front of you. The document, the business continuity checklist, is in fact the bare bones of a business continuity plan. It's a relatively short document, weighing in at about nine pages. If you are from an organization that is interested in having a translation of this document, then you can very quick and easily reach out to IFAC, and they will fast track approval for you to go ahead and translate the document and make available the Word document, which obviously makes it a good deal easier for you to use. So as I say, small and mid-sized accounting practices have a deep knowledge of their client's business, and many have the specialist skills that are necessary to help them navigate through these challenging times. Sorry, if I could have the next slide. As I mentioned, the continuity tool can be used by the SMP while advising their SME clients, or it can be used by the SME without any intervention or involvement of their small and mid-sized practice. The checklists, and in fact business continuity plans more generally, the small practitioners can help in a variety of ways. The small practitioner could, for example, simply show you how to complete the checklist, how to complete a business continuity plan. and then leave you to get on and do it. Or they could say, well, this is how to do it, and we'll review a draft document and kick the tires, so to speak, to determine whether or not that business continuity plan is a good one or not. Well, thirdly, this small and mid-sized accountancy practice could do the whole thing itself for the SME client. They could use these tools and prepare complete the checklist, complete the plan, and likely perhaps charge for it too. Many small and mid-sized accountancy practices are showing their SME clients how to go about doing it themselves, and oftentimes are not actually charging for that service. They're only charging as and when they have to start to commit serious amounts of time to help the SME with business continuity. It's not an exhaustive checklist that IFAP produced. It's rather a tool to help identify priority actions for immediate attention. Sorry, if I could have the next slide. I'm just going to show you two parts of the checklist. Comes in two parts. I'm just going to show you a sample of some of the checklist action items that appear. The two parts are one on financial management tasks and the other on strategic management tasks. The strategic management tasks appear on page 3 of the document. Accurate and timely financial information is critical, especially in difficult times like these. And the checklist provides financial management tasks that should be considered to help understand how the business is performing and identify focus areas for immediate action. What I've got on the slide in front of you here is a sample of some of those activities and actions. They include things like preparing cash flow forecasts for 3 months, 6 months, 12 months, scenario planning. What if this was to happen? What would the cash flows look like, for example? Activity and actions around exploring sourcing grants, subsidies and loans, reviewing working capital, debtor and creditor ledgers, and so on. So that's the financial management task. In terms of strategic management tasks on the following slide, you can see that the activity and actions are much more general in nature. They're not specifically tied to the financial side of the business. These tasks are important to review the business strategy, plan and operational procedures, especially if there have been significant changes. And you can be sure that the vast majority of SMEs are facing significant changes as a consequence of the pandemic and the lockdown measures that were introduced as a consequence. So some of the activities and actions include ensuring health and safety of staff and providing clear communication to them. And that, of course, applies post-lockdown as and when the offices and the places of business reopen. It's very important to have clear health and safety protocols in place. To update a strategic plan and prepare a strengths, weaknesses and opportunities and threats analysis, what's called a SWOT analysis, and so on. There's a whole lot of other ones. The document does in fact provide a column in which the small business or the small practitioner, if they're doing the checklist, completes the comment box to say what has or hasn't been done. My final slide, before I stop for questions, is another very useful tool. This one is an ACCA webinar that was conducted in May. That webinar is archived and can be accessed using the URL link given in the slide deck that was shared with you yesterday. This webinar, which runs for about 1 hour, talks through what one small and mid-sized accountancy practice does for its SME clients in terms of helping them with business continuity. It provides a pack of information free of charge that an SMP or an SME can use to assist with business continuity and restructuring. That effectively completes just what I wanted to do. I promised to share with you some tools and techniques available to help with small business continuity. I now just wanted to open up again for questions in case we have any from all of you, and the questions again can be asked either by raising the hand or by typing the question into the meeting chat box. I'm not currently seeing any questions. I'm obviously somewhat reluctant to ask questions of myself, but I think Martin de Bay has just weighed in from he happens to be the chair of our digital working group, and he's from our member organisation NBA, which is the Dutch professional accountancy body. Martin, I'll give you the floor so that you can pose the question yourself, if that's good with you.
That's good for me. So thank you for giving me some time. I was, let's say, in September on behalf of the EFAA at in SMEunited early warning project in Barcelona, where we heard, let's say, a lot of SMEs talking about what their stress was on, let's say, solvency, etc. That was before the COVID period. And most of them said that the SMP wasn't helping them with accurate actual financial information. And regarding, let's say, now the COVID period, I see a lot of stress within the SMPs to support SMEs with good financial information. I noticed your, let's say, sheet about the ACCA saying something about, I don't know, about, let's say, tools to support your clients and to advise them. But one of the questions we got is that, yeah, okay, we want to do that, but that will cost our clients money. But the client has no money. He has some stress. He has he's a lack in the payments. So there's a little bit of, let's say, gap between, yes, we know we want to help you, but the other hand, even now, SMPs, and I don't say it loud, are also in distress because some of the clients are not able to pay their invoices. And so an SMP is also an SME. And regarding back to my questions, how are we able to support our SMEs on this, on let's say, real actual steering financial information to know if they are within 3 or 6 or 9 months able to pay their bills and our bills. And I think that's I think one of the lessons we learned also with the EFAA, how it's the digital knowledge or the competence of our SMPs regarding SMEs, but also back. Is he still working his invoices on paper or on Excel or on Word? Or is he providing us daily his financial information? So we know exactly that he has to receive next month this amount of money. Or does he deliver quarterly his financial information so we process them? So I think that's, if we want to help or support our SMEs, we really need to step up more to actual information.
I couldn't agree more with your remark, Martin. I have heard, certainly in the early days of the lockdown, I think there were a lot of SME clients saying, I'm not hearing from my accountant. The accountant has not been proactive, has not reached out to me. That accusation, I think, was quite a reasonable one early in the lockdown. I think since then, a lot of SMPs have mobilized. They have started to be more proactive and reaching out and communicating on a more regular basis with their SME clients, and saying things like, you know, there's an awful lot government support schemes out there, I can help advise you on what might be most appropriate and walk and talk you through the process of how to get the money. And I can also help you with financial management and cash flow forecasting and so on, because these are going to be crucial over the coming few months. I think many, I hope, SMEs have started to hear that call. I think you've also hit the nail on the head in terms of digitalization is critical. It's critical in both senses, in the sense of the SMP needs to be digital savvy in order for them to be able to gain access to the appropriate software tools. Often these software tools are simple apps which you and I can get on a phone. And there's a proliferation of these tools. There's hundreds, if not thousands of them. And many small and mid-sized accountancy practices, including the one that was featured in the ACCA webinar that I just referred to a moment or two ago, are using these apps specifically to help their clients. Now, the other side, of course, of the equation is that the SME clients themselves need to be sufficiently digitalized if the SMP is to be able to use these tools with those clients. And again, I think the responsibility largely rests on the SMP to help their SME client go through this digital transformation.
That's true. But one of the from our, let's say, from the Netherlands, I know there was some stress from SMPs, because if an SME could get some support from the government, the accountant has to give at the end a declaration that the money is spent well. Now, that's a lot of stress for the accountant, because he got to know at an early stage if the money required for paying the salary of the people is also used for that. So let's say digitalization is really speeding up now at this moment. I think that's why I'm glad we are a partner with the SMEunited. I think we have to very quick find ways and tools to support SMPs and SMEs, especially on this area of solvency, but also how to support them if they required some of the support from the European Commission or from the government, so that we can, as a trusted advisor, help them and also declare that the money is well spent. Because I think that will be, beside, let's say, next time a big problem for SMEs, is there any fraud used by the money? And I think that's something which is not discussed really now, but I think that is if you are in the need of money and you get money, you will spend it. And the question is, are we able as SMP to, on accurate financial information, to give the right declaration? But that's also, I think we need to discuss also with SMEunited to find ways to support on that, because
Gerhard, do you have any remarks from your side based on what Martin and I have just?
But the one answer is, of course, I think the cooperation we have in the Early Warning Europe project this cooperation could be used also to make progress in this regards. I am also responsible in our organization for taxation. And here we have also a very interesting discussion about digitalization, because in the moment, if SMEs are sufficiently using digital accounting systems, digital invoicing systems, digital payment systems, it also may become easier to use this for tax payments, etc., etc. So this belongs all together, and we and you have to motivate the SMEs to go in this direction. The other point on are SMEs able to finance you when you help them? We have in other areas, especially in the environment area, but also in digitalization, the experience that it is not enough to provide financial support to SMEs to invest in more energy efficiency or in less polluting technologies or in digitalization. In some areas, we have experienced that at least before you have to finance 70% of the advisory services to explain to the SMEs, to motivate them, to advise them in which direction they could develop. And this is a little bit for other areas maybe too. Yeah? That means that a part of the program money should be used to advise them by your people or by others to make the right decisions in the SME side.
Yeah, I agree. And I think, let's say, although it's a very hard period for everyone, I think for the collaboration between you with the SMP and the SME, it's better because we need each other. So let's end with the positive side of the situation is with the more and more interaction we have, we know more about our problems for our customers, and we know probably exactly how to help them more in a more sufficient way.
And if you help them properly, then they have the money to pay you.
Yeah, that's that's true.
And certainly, if you help them survive, there is more SMEs around as clients for SMPs. I mean, the reality is that we're in this together, folks. Small and mid-sized accountancy practices and SMEs. We're all in the same boat together. All I would urge is that SME organisations and SMEs themselves, if their accountant is not stepping up, then I think they should challenge them to do so and say, look, what is it you can do for me? Don't necessarily sit back and wait. The professional accountants are very well equipped to provide timely financial management advice. And many of them are also equipped to provide advice on digitalization as well. So do not be shy in asking them how they might help. Obviously, one needs to be very clear what you're getting for your money, whether you have to pay for things. I think in many cases, SMPs are initially providing some education, if you will, free of charge. And then if more in-depth analysis or advice is required, then inevitably the small and mid-sized practice is having to charge for it because they are not a charitable foundation. Okay, with that in mind, it's now 8:56. I think we can roll on to the final slide. And I think, Salvador, you'll be making a few closing remarks.
Okay, thank you. Thank you very much. Thank you very much, Paul. Thank you, Gerard. Thank you, Martin and Robbie and the rest of the participants. In my opinion, was a very interesting discussion, a very important topic today. The liquidity. The liquidity in the past, I was CEO in one instrument about equity and cash equity, and now I am working very close in different instruments for SMEs of equity and cash equity. And I agree, it's very important, the relation is very important. It's very important, the financial information and non-financial information to prepare the discussion with the people that take decision about the provides liquidity and support and different SMEs. And for those reasons, the professional accountants have, in my opinion, a very important key role in this activity for the next period. It's very important our role. We need to provide very good advice for our SMEs. And I think that our role in the future will be very important. For those reasons, thank you very much to SMEunited. Thank you very much, Paul. Our next webinar will be in October. You will have more details soon, and you know very well. We are working to help both capacity of SMPs to assist SMEs, and of course, is this activity between SMPs and SME is better together. We need to work very close, and we need to share with our SMEs the next period. That the next period need people like you. Thank you very much for this activity, and see you soon. Okay.